Welcome back to the channel, everyone. Today I want to talk about Melvin Capital liquidating and winding down their fund. I also want to talk about how this article proves that Melvin Capital has been paying extortionate amounts to support their synthetic short position. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, this article from the New York Post says that Melvin Capital are down 23.3% year to date, aka January, February, March, and now April, as the founder considers winding down the fund. It says embattled hedge fund Melvin Capital reported another down month, just weeks after founder Gabe Plotkin said he was considering winding down the fund. Melvin still struggling to recover after a massive short squeeze on meme stock GameStop. We know it wasn't a true short squeeze, but let's run with it. Crushed his fund in January 2021, and he lost another 3.3% in April of this year. That takes his fund's year-to-date drop to a whopping 23.3% on top of the 33% that he lost last year, according to a letter to investors reviewed by the Post. Melvin's CEO, who made $800 million in 2020, lost me even more money in April and wants to make himself more fees, one investor fumed. Shameful, disgusting, horrible behaviour. So this shows that even investors in Melvin Capital are disgusted and are willing to pull out their money. Now obviously if investors do pull out their money, that's brilliant for AMC because Melvin Capital will have to cover their short positions to return the investor cash. The recent April email to investors that Plotkin's most recent bets pushed the hedge fund even deeper into the hole was met by anger. These people suck, the investor said, slamming Melvin. And interestingly enough, the article says, but his lifestyle appears to be unaffected by his recent losses. He's still holding on to the beachfront home he bought in 2020. Plotkin should sell his $44 million Miami Beach home after losing all of us so much money, rather than charging us more fees, the investor fumed. This goes to show that investors are absolutely livid with Melvin Capital and can't wait to withdraw their money. Considering investors are currently so livid and so fuming, there must be some kind of ban on redemptions, and therefore investors can't actually withdraw their money at the moment. Whether Melvin Capital aren't allowed to return the money to investors by the powers that be, or whatever other nefarious activity is going on, I'm not too sure, but it's clear that investors are absolutely fuming. But something that really stands out to me is the fact that Melvin Capital lost another 3.3% in April. If we have a look at AMC, AMC opened April at $25 per share and closed April at around $15 per share. AMC fell by $10 per share and GameStop fell as well. Considering that Melvin Capital have a short position on AMC and GameStop, you would have expected Melvin Capital to actually make money in April. And therefore the fact that Melvin Capital actually lost money in April really goes to show that they are paying millions and millions, potentially even billions of dollars to support this illegal synthetic short position. Obviously on top of that, all of their long positions are doing terribly as well, and all of their other short positions must be moving against them. I think it really goes to show just how much money Melvin is having to spend to support this short position, considering that AMC fell in April, and yet Melvin Capital still managed to lose money. And now on top of that, another similar fund is that Tiger Global sunk another 15% in April to push this year's loss to a whopping 44%. Bill Hwang obviously used to work for the fund Tiger Global, and Tiger Global has its hands in many different pies around the world. And therefore the fact that this one fund sunk 15% in April to cap off the year-to-date losses at 44% in the first 4 months of this year goes to show just what kind of situation the current market is in. It says Tiger Global's performance problems are piling up. The firm's hedge fund declined 15% in April, taking its loss in 2022 to 44%. Tiger Global's long-only fund was hit even worse, tumbling 25% last month and extending its drop for the year to 52%. A spokeswoman for the firm, which managed $35 billion across its hedge, long-only and crossover funds, reported that Tiger Global is heading for its worst year ever. And Mark Coders reports that it's not only Tiger Global and Melvin Capital that's struggling, because SoSyn, another fund, is also down 43%. Now guys, many of you may not have a lot of confidence in the stock market at the moment. There's all of this market manipulation and market fraud that seems to be going entirely unpunished. And that's why I personally also like to invest in crypto, especially now that Bitcoin is trending upwards. I personally like to use BlockFi, and right now you can currently get up to $250 in free Bitcoin just for signing up to BlockFi using the link in the description below and making your first deposit. With BlockFi, you can also invest in tons of other cryptos like Solana, ADA, Avalanche, Doge, Matic, and many others. And that's why more than 500,000 people and 350 institutions globally use BlockFi to manage over $10 billion in assets. The BlockFi platform is also entirely free to use and requires no minimum balance. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. He said SoSyn down 43%, Tiger Global is down 44%, and guys, it's only April. Leverage and arrogance with a healthy dose of greed can do that to you. He goes to show that there's currently so many funds that are far too over leveraged and far too arrogant to admit they're wrong and just cover their short positions. Obviously, it's now at the point where these hedge funds can't even cover their over leveraged shorts without liquidating their funds. And as the market continues to fall, these long-only funds will end up being liquidated, and these funds that are also shorting AMC will be liquidated and forced to cover their shorts. And now I also wanted to talk about how we can actually request the true number of failed to delivers from the DTCC under the Freedom of Information Act. But before I do that, I wanted to quickly reassure any of you that are currently having any AMC doubts. No More Mr. Nice Guy tweeted saying, in case you 1 have any doubts, 2 felt alone, 3 haven't actually yet looked at the data, 4 listened to those shills and bots, 5 watched the news, 6 paid attention to your wife's boyfriend, or 7 thought about selling. A friendly reminder is that shorts haven't covered. Enjoy your day. The Ortex guy actually wrote an open letter to the hedgies saying, hey hedgies, it's me again. Sorry for all the lost sleep. Over a year ago, I took a risk on something I had no clue on how it would end. I would have sold at $100 back then. That's on you for not realizing this, but your pride is my profit now. He said AMC is now my biggest financial investment, and that says a lot seeing that I own property. But you know what's really mind-boggling is that I've fully embraced an all or nothing mentality on my position. He said, sure, I won't be the last to sell, but I won't be cutting in line to do so either. He said, you see, Hedgie, this is not just about a means to retirement, and it's not even a means to generational wealth for me. It's the end of financial uncertainty to literally everyone in my inner circle and everyone they know. And Frank Nez says, if you're holding significant losses in AMC stock, it's important to note that the data is showing that AMC will run up again. As I've gone through on this channel many times before, the data shows that AMC will run again. The OBV is still high, the days to cover continues to rise, the average age of shares on loan only goes up, and obviously most importantly, the shorts haven't yet covered. Everything points to the shorts not yet covering and continuing to increase their short position. And Frank Nez says that AMC's current short interest tells us that the AMC price is not done surging. And obviously as AMC as a business has improved drastically, therefore there's no risk in AMC as a business based on fundamentals. The only reason that AMC's price is being held down is because the shorts continue to add to their short positions and continue funneling in money to hold AMC down. But obviously at some point that money will run out and AMC will squeeze. We've got tons and tons of catalysts at the moment. We've got the Department of Justice investigation going on in the background. We've got a potential China default, a potential Russia default, the US stock market crash, the housing market crash, and tons more. We've obviously also got the GameStop share split announcement, we've got the AMC earnings call, and we've also got many funds like Melvin Capital continuing to hemorrhage money. And therefore it's only a matter of time until AMC does end up squeezing. And a potential thought that could get us there even faster is if we request the number of failed to delivers from the DTCC under the Freedom of Information Act. This post is interesting. Apparently we reserve the right to discover the true amount of failed to delivers the DTCC is hiding in their black box. We can actually request the amount of failed to delivers secretly accumulated through the Freedom of Information Act for GameStop, but also all of the failed to delivers currently throughout the entire market. I actually managed to find this specific article that was linked in the post that says, recall in 2004 that the darkness of the DTCC was successfully breached by Dr. Leslie Boney, acting as a visiting economics scholar on behalf of the SEC that was designing Regulation SHO at the time. It says what she found was disturbingly high levels of strategic or intentional unaddressed failed to delivers, well in excess of what she anticipated. It says a now popular way to breach this darkness is to order a Freedom of Information Act or FOIA analysis of failed to delivers held at the DTCC. This mechanism has substantiated the existence of massive levels of unaddressed and archaic failed to delivers in the share structures of targeted corporations. And a third way to breach this darkness is to hire a massive network of private investigators, or AMC apes that do that due diligence, to delve into the behind the scenes activities of the DTCC and in the naked short selling world in general. The expose covering this approach to illumination was written by Mark Mitchell and is available at deepcapture.com. This excerpt comes from a 142-page document on the SEC website about naked and synthetic shorting. I do think that requesting the true number of FTDs for GameStop and AMC through the Freedom of Information Act is a good idea and something that we should all do. I think this was actually performed once or twice back in June, but only by very few individuals. I think if we paid more attention to this, I think the DTCC would have no choice but to provide us with the information. So guys, be sure to let me know down in the comments below what you think about Melvin Capital losing even more for the year and liquidating their fund. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!